Hello everybody, welcome to another video. In this video we're going to dissect the breaker block. This is a very familiar concept. Countless traders utilize it to their advantage, and I'm going to break down what it is, everything about it in details, how to use it in context to maximize your results with visual examples. So without further ado, let's get into it. So breaker block, what is it? Well, it's an entry mechanism composed of a swing high, followed by a swing low, followed by a higher high. As you can see on the visual to the right, we form a swing high, swing low. That swing low is the formation of that breaker, but it comes once you get another swing high, and then price goes completely through that initial low to form a lower low. So you get a higher high, higher low, higher high, and then a lower low, forming that breaker block, and then it retests that initial swing low for an optimal entry in context towards the drawn liquidity. Like I said, the breaker block is merely an entry and requires a model revolved around it. Example, the AM reversal or the rebalance model, or any other model that you can utilize this to your advantage with. I will show visual examples of what a breaker block looks like, and I will dive into the chart. So if you're confused, it's okay. Stay with me. I will make everything much clearer. So let's analyze this from the sketch on the left. The orange arrow, I have it broken down on the right. The information. The orange arrow is the swing low that is formed. The purple arrow forms a swing high, which is a lower high there. Price then formed a lower low at the blue arrow. And then you get that reversal, and price forms a higher high, going through that initial high. So that red arrow goes through the purple arrow's high after we made lower lows. So you have lower low, lower high, lower low, then a higher high going through that initial high, and then come back to retest that breaker. And that is your entry revolved around your model. You can pause this, analyze this, and I will give you more examples, so stay with me. So let's get into an example of this breaker entry. Of course, like I said, it's merely an entry and it requires a model revolved around it. You need context. So in this example, as you can see, price came and swept sell side liquidity with a 50-minute bullish imbalance as well that it is respecting with the bodies. There are clear objectives to the upside that price can navigate towards, and price is showing a willingness to head higher from this point. So this is where we go to the lower time frame and look at the comparison. We have a lower low formed with the orange arrow. Price then forms a high, comes down to sweep liquidity at the blue arrow, which is a lower low, and then reverses and makes a move through that initial high, through that purple arrow, and then comes right back down to retest that breaker. And that is your entry. Price is changing the state, forming that breaker. You get that entry. If there's clear objectives to the upside, you get your move. You get your model. Now, one thing to note. Bullish breakers, you formulate the box around the up close candles range. In that swing high that we have, we form a swing high at the purple arrow. I utilize the up close candles range, not the down close candles range as my breaker, the up close candles range. Same thing, vice versa for bearish breakers. If there's a bearish breaker and we have that swing low formation, that 3 candle formation, you want to formulate that breaker and formulate it around the down closing candle in that swing low formation. So on the example here to the right, you can see that we formed a swing high at that purple arrow to form that breaker before it gets validated later on. But that purple arrow, that swing high, I utilize the up close candle as my breaker, not the down close candle, because it's a bullish breaker. Now, if it was a bearish breaker, it's the other way around. But in this example, it's a bullish breaker. You want to formulate the breaker around the up close candle in that swing high formation. Make sure of that. And so you get the retest here of that up close candles range of that bullish breaker. And from that point, you enter targeting opposing liquidity. So this is what it looks like without all the annotations. Sweeping sell side, 50-minute bullish imbalance, breaker forms. And then from that point, you enter off the retest of that breaker, targeting buy side liquidity. And what do we get from that point? Price goes to the internal liquidity, comes back down to the breaker, and time again, price is respecting that bullish breaker because it is a highly reactive area for price to bounce off of. And so we go to that buy side liquidity, we go to that objective to the upside, and respect that bullish breaker throughout the whole move, time and time again. All right, so here's an example of the breaker block in action using visuals on the chart to put yourself in the position to take the most optimal breakers, understand what it is, and be able to identify it on your own. So what are we seeing in terms of price right now to this point? Well, if you see leading into this AM session, price has been forming lows, highs, lows, highs, but the lows are being taken out time and time again. Look, this low swept, this low swept, this low taken, this low taken, this low taken. So price is doing its damage to the downside. But as it keeps making lower lows, what are you noticing that it's doing? It's leaving highs behind here. High left behind, high left behind, high left behind. It's leaving this liquidity to the upside. So price should make a move to the upside at some point. So then I look and I say, okay, where can I find an optimal entry to the upside? Heading into market open, price dumps and sweeps this low right here. So we get a sweep of sell side right here. Let me mark this out. Sell side right there. So we get a sweep of sell side. And I'm looking and I'm seeing that price is clearly leaving multiple highs behind. We have buy side right here. So we have liquidity to the upside to come take. While price has done its damage to the downside. It's doing its damage. The damage is done. What else do we have? We have a bullish 15-minute fair value gap right here. So price sweeps sell side, taps into this 50-minute bullish imbalance, clear draws to the upside. I'll go to the lower time frame now and see if I get an entry. See if that breaker does form. And we'll look. There's context now with this entry. There's context if we get this breaker. Price forms this low. Price then comes low, high, lower, low. Sweeps the initial low made. And we have this high and now a lower low. So what would price have to do to form this breaker? Well, this is what the breaker is. We have low, high, lower, low. Come back above that initial high. Retest it. And that right there, this is the breaker right here. That price retests before going up. So this right here, this candle would have to be the breaker. If we come back up, we would validate it with the context behind it. That price should make a move to the upside. So we're waiting to see if price does come and validate this breaker right here. This is the bullish breaker right there. Price has not yet validated. It hasn't closed above it. For price to validate this, it has to close above. We're waiting for price to do that. And just like that, now we get it. Price closes above this breaker. It's valid. Clear objectives to the upside, like that buy side liquidity. Off that low, high, lower, low, price comes up, reverses, comes back above that initial high that it made. Validating this breaker with the context behind it. Given that price definitely has the ability to head to the upside. State of delivery is confirmed as bullish here. And so you would enter off the retest of that breaker, stop below the low, and target that buy side liquidity like that. Almost a 3-to-1 R off this move alone. And we want to see how price does. Like I said, the context supports higher prices here. And that is an optimal breaker block to enter off of. Low, high, lower, low. Comes back, validates that high. And this is the optimal candles range to mark. Why this one? Because it's an up close candle and it is the largest range up close candle with the body in this swing high right here. This is the swing high. Low, high, low. A swing high, a 3-candle formation swing high is a high with 2 lows on each side. This candle was lower than this candle, and this down close candle is lower than the highest point of this candle. So that's our swing high right here. This is a swing low. This is a swing low. It's a low with both candles on each side closing and wicking above the low of this candle. And so that's a swing low. This is the swing high of the breaker. And the up close candle with the largest range of body in that swing high formation is the breaker. And so off the retest right there, that's our entry, and we would target the opposing buy side liquidity. This is a optimal breaker. Why? Because there's clear objectives to the upside. We get that 50-minute sweep of sell side, 50-minute bullish imbalance. Lower time frame, you get the confirmation internal sweep right here. Changing the state of delivery, breaker block validated, clear objectives to the upside on the higher time frame and the lower time frames. And so you would enter off the retest of that breaker. And so let's see what price does from that point. Price retests the breaker and goes 125 points to buy side liquidity right away off the bat. Look at that explosive move off that breaker block entry. And that's how you utilize the breaker to your advantage. Using context, price showed a willingness and there were clear objectives to the upside. So finding an entry, a valid entry, using context is what puts you in the best position to succeed. And this is an optimal breaker to take. And as you can see, it panned out beautifully to that opposing buy side liquidity level. All right, so in the previous example, I showed you guys how to use the breaker on the lower time frame to optimize your entries. And I want to make it clear that the breakers are valid on all time frames. You can utilize it on every single time frame if it's valid with context to give yourself direction in the market. And so the lower time frame validation of the breaker gives you a great entry. These higher time frames give you clear directions on the market with context in it. So we're going to utilize the 15-minute and see what forms to this point and how we can utilize it to our advantage. And so as you can see, to this point, we have clear 15-minute bullish imbalances here. Price disrespected this 15-minute bearish imbalance right here. This 15-minute bearish imbalance, as you can see, got disrespected here. And so we come down and now we make a run and tap into this 50-minute bullish imbalance. To this point, it's been respected. So we're disrespecting bearish imbalances, respecting bullish imbalances, and we have clear highs to the upside. 1, 2, 3, 4, 5. Clear highs to the upside. And like I said, let's go over what a breaker is again. It's going from a low, high, lower low, like this. And then price comes back above that initial high, right here. Then it retests that high. This is the breaker. Low, high, lower low, reversal. Come back above that initial high and then retest it. That is what the breaker is. That's the basis of it. And so price retests this 50-minute bullish imbalance right here. And I want to see what forms to this point. What do we have here? We have a low, high, lower low here. Price sweeps sell side. 50-minute bullish imbalance. Disrespected this bearish imbalance and clear highs to the upside. I want to see what price does to this point. If everything is according, this is the breaker right here. Like I said, low, high, lower low. And if we come back above that initial high and close above this bullish closing candle, this is the validation of that breaker. And if we get that with clear highs to the upside, that can give you a direction in the market. Now, what do you see happen as well? We disrespect this bearish imbalance right here. So this bearish imbalance has been disrespected off that sweep of liquidity. 50-minute bullish imbalance respected. 50-minute bearish imbalance is disrespected. Clear highs to the upside. And now we validate this breaker. So up to this point, state of delivery is now confirming that there is a willingness to head higher. And we come back, retest that bullish breaker with the clear highs to the upside. Price can definitely make a move to all these highs here to this point. And so let's look. And as you can see, price digs into that breaker, respects it, and makes a clear move to the upside, taking out all of that liquidity. So given the context, you can locate these highly optimal concepts forming in the market. So let's see what price does to this point as it continues to form. See, as you can see, it's coming. It's making more highs here. We're just forming higher highs to this point. It's showing a willingness to head higher here. And what does price do to this point now? Okay, price sweeps, liquidity right here. We have a liquidity sweep right here. What do we have here? Well, let's see what a bearish breaker looks like, right? High, low, higher high, come back below that initial low, retest that low. That's the breaker right here, and then make a move to the downside. High, low, higher high, back down, reversal below that initial low, retest it. That's your breaker. We have a high, low, higher high, sweep of liquidity. The validation of the breaker would be if we came and closed below this low. That's the swing low candle formation. This is where the breaker, the bearish breaker, if it closes below, would form. If we have clear objectives to the downside, we have lows here that price can come take out. If we validate that breaker, that is the bearish breaker forming. We close below, validate that breaker, and so from this point, state of delivery is showing potentially that there's a willingness to head lower. Disrespected this bullish imbalance right here. This bearish imbalance is being respected to this point. We haven't closed above it. We just formed it. Bearish breaker right here. Formed. Sweep of liquidity. Clear objectives to the downside. Retest it. Retest that breaker. And as you can see, there you go. We make a move starting to take out these lows. And so that's how you utilize that breaker. And there we go. We come for this liquidity right here. And so that's how you utilize the breaker to your advantage, to give yourself direction in the market.